Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the main problems on other receivables and other payables. Already in the last video I have completed 4 main problems. Now in this video I'm continuing from the 5th problem. Now see the 5th problem carefully. Alan sublets parts of her premises to several tenants. So here the person is Alan and she has sublet her premises in different parts to different tenants. That means she is having different tenants from whom she is recovering the rent. So rent receivable is an income. So on 1st January 2015, she had received rent in advance from a tenant, $800, and was owed rent by another tenant, $200. That means from one tenant, she has received the rent in advance. From another tenant, the rent is owing. First of all, the rent received in advance is a liability, whereas rent is owing, receivable, is an asset. So here, $800 is the advance rent and $200 is the owing rent to be received. During the year, she received $13,600 in total from her tenants. The total rent received from all tenants is $13,600. On 31st December 2015, she had received rent in advance from a tenant $700 and was owed rent by another tenant $350. So end of the year again, from one tenant, rent received in advance. Another tenant, rent is owing. Remember, rent received in advance is a liability, whereas rent owing is an asset. I told you in the previous video also, always when I speak something, when I tell something, write it down in a notebook. Always keep a notebook beside you while watching the video. Prepare the rent received account for the year ended 31st December 2015 showing the amount transferred to income statement. We are required to prepare an account, rent received account, and find out how much is the rental income to be transferred to income statement. According to accrual concept, only current year's rent should be considered, it should be taken in income statement. Any rent of the last year or any rent of the next year should be excluded. Now, balance the account on that date and bring the balance down on 1st January 2016. We have to prepare the account. So you can see here, this is the rent received account. The beginning of the year is 1st January 2015. On 1st January 2015, rent is received in advance and rent is owing both. $800 is the rent received in advance. I told you rent received in advance is a liability and all liability will show credit balance. So credit side I have taken balance brought down January 1st, 2015, beginning of the year. How much is the rent received in advance? First line it is given $800. So I have taken $800. Secondly, on the same date, rent is owing by another tenant $200. Rent is receivable. When rent is owing or receivable, it is an asset. Rent owed is an asset. So debit side, balance brought down $200. This is rent owing and this is rent received in advance. Rent in advance. And this is rent owing. For your understanding, I am writing down here. Next is, during the year she received $13,600 in total from her tenants. Rent received, the entry will be bank account debit, rent received account credit. So rent received account credit side, cash book, bank. So how much is the total rent received? $13,600. And what is the date during the year? Means we'll take the last date, December 31st. This is the total rent received. And on 31st December 2015, she had received rent in advance, end of the year, closing. So we close the year. We close the year like this. We have taken the total line. Now end of the year, there is rent received in advance. The rent received in advance is a liability, and liability will show credit balance. So here I am writing down balance brought down, and here balance carried down. So how much is the received in advance rent? $700. So here I am taking $700. Here also 700. Last date is December 31st. Now next year, 2016, January 1st. Or now end of the year, $700 received in advance and $350 are owing. Another tenant is there, owing the rent is $350. Rent owed receivable is an asset. An asset will show debit balance. So debit side I am writing balance brought down $350. So next year to 2016 January 1st. Here balance carried down, this 350 here. So 350 carried down, 350 brought down, 700 carried down, 700 brought down. Last date December 31st. Or prepare the rent account. We have completed whatever data is given in the problem, we have filled up. Now take the total on the credit side, 800 plus 13,600 plus 350. So 800 plus 13,600 plus 350, it comes to 14,750. The total on the credit side is 14,750. Same 14,750 I am writing here. From 14,750 minus 200 minus 700. The balancing figure will be 13,850. This 13,850 should be transferred to income statement. Balancing figure. December 31st. That's all. So current year's rental income. The current year's rental income is 13,850. This 13,850 is the rental income. Rental income of the current year, it will be transferred to income statement. That's all. This is the end of problem number 5. Now problem number 6, you can see here. Define the terms other payables, other receivables. It is asking you the meaning of the term other payable, other receivable. Then second, Wasim is preparing his financial statement for the year ended 31st May 2018. So first of all, we'll define the term other payable, other receivable. Other payable. Normally, other payable means the expenses of the current year which are not yet paid. The expenses of the current year which are not yet paid are called other payable. Example, salary of the current year is 1,20,000. Out of 1,20,000, only 1 lakh is paid. 20,000 is the salary of current year but not paid. So the 20,000 is the expense of the current year not paid is called other payable. Similarly, other receivable. Other receivable means expenses paid in advance. Expenses paid in advance. Example, the current year total rent is 1 lakh. 1 lakh. But we have paid 1,20,000 rent. During the current year, we have paid 1,20,000. But the rent of the year is only 1 lakh. 20,000 we have paid for the next year. That is advance rent paid. So when advance rent paid, it is called other receivable. So other receivable is an asset. Other payable is a liability. That's all. Next question is, Wasim is preparing his financial statement for the year ended 31st May 2018. On 5th June 2018, he received an invoice of $960 for advertising covering the period from 1st March 2018 to 31st October 2018. So advertising invoice, he got it. That means he has paid $960 for advertising. And this $960 is for a period from 1st March 2018 to 31st October 2018. So how many months? March, April, May, June, July, August, September, October. 8 months. For 8 months, the advertising expenditure is 960. From 1st March to 31st October. When he is closing the accounts, 31st May. So we have to find out how many months are falling in the current year and how many months are falling in the next year. March. From 1st March, it is applicable. So March, April, May. Because we are closing the accounts on 31st May. So March, April, May. 3 months are in the current year. So current year advertising expenditure will take 3 months. Remaining after May, June, July, August, September, October, 5 months. 5 months are falling in the next year. That is prepaid, paid in advance. Right? So 960 we bifurcate. 3/8 advertising will be put in the current year. 5/8 advertising will be carried forward to the next year. Advance paid. That's it. Calculate the amount to be added to advertising account for the year ended 31st May 2018. And how much advertising will be taken as expenses for the current year ending 31st May 2018. That's 3 months. 3 months will take it into current year. Here you can see other payable expenses which have been incurred but unpaid at the financial year end. Expenses incurred during the current year but unpaid at the end of the year. That is called other payable. And other receivable expenses that have been paid in advance of the accounting period. Current year we have paid some advance expenses for the next year. This advance payment of expenses are called other receivable. Now year end on 31st May 2018 for Wasim. For Wasim, the year ends on 31st May 2018. Advertising income for $960 is for a period of 8 months. That is from 1st March 2018 to 31st October 2018. 8 months from 1st March to 31st October. Now for these 8 months, we have to see how many months are falling in the current year and how many months will go to the next year. So it is applicable from 1st March. So March, April, May. 3 months in the current year. Therefore, 3 months fall in the current year, that is from 1st March to 31st May. And 5 months falls in the next year from 1st June to 31st October. But ultimately it is asking you how much advertising expenses will be charged to income statement of the current year. So 3 months. Amount to be added to advertising account for the year ended 31st May 2018. Total advertising invoice paid is $960. How many months? 8 months. This $960 is for 8 months. But we need only for 3 months. So 3/8. 960 into 3/8, you will get $360. So out of $960, $360 will be taken to the current year's income statement. Remaining $600 will be carried forward to the next year. It is not current year's expenditure. It is next year's expenditure. That's it. So this is the end of problem number 6. Come on, see the 7th problem. XI Fin Lu, a sole trader, extracted the following trial balance from his books for the year ended 31st March 2017. So this XI Fin Lu is the sole trader and he has extracted the trial balance from his books of account. And the trial balance is given as on 31st March 2017. Purchases and revenue. So debit side 2,24,000, these are the purchases. And 4,19,700, these are the revenue. Revenue means sales revenue. Then inventory on 1st April 2016, this is the opening inventory, beginning of the year. Then equity on 1st April 2016, this is the capital at the beginning of the year. Then bank balance is given in the credit column. When bank balance shows a debit balance, it's an asset. When bank balance is given on credit column, it's a liability. So it's an overdraft, loan. So this bank account showing credit balance 43,500 will take it under liability. Then cash in hand is given 900. Carriage inward. Carriage inward will be added to purchase of material. Carriage inward will be added to purchases. Then discount. Here discount is given in debit column 14,400 and credit column 9,300. So it is discount allowed and discount received. So debit column whatever is given, that is discount allowed. And credit column is given discount received. So discount received is an income and discount allowed is an expense. So debit side 14,400, discount allowed, that will be taken under expenses. And this discount received will be taken as other income. Revenue return. Revenue return means sales return. It will be deducted from revenue. Then purchase return. It will be deducted from purchases. Carriage outward. It is other expense. Rent and insurance. It's an expense. Then allowance for irrecoverable debt. This is the old allowance. That means the allowance which is there from the beginning of the year. The beginning of the year allowance for irrecoverable debt 6,600. Office equipment and delivery van. These are the non-current assets that will go to statement of financial position. Then trade receivable and trade payable. Debit column 1,19,100. These are trade receivable. And credit column 61,200 is the trade payable. Trade payable is a liability. Trade receivable is an asset. Drawings. Drawings will be deducted from capital in the statement of financial position. Irrecoverable debt. Irrecoverable debt is a loss. It will be taken under expenses. Wages and salaries, expenses. Office general expenses, expenses. Provision for depreciation. This is the accumulated depreciation. This will be deducted from non-current assets in the statement of financial position. So we are given the complete trial balance. Apart from that, some notes are given, adjustments are given. Remember, trial balance items will appear only once. Either it will come in income statement or it will come in the statement of financial position. But adjustments, notes, it will appear twice. Once it will appear in income statement, again the same item will be adjusted in statement of financial position 2 times. The first adjustment, inventory. Inventory on 31st March 2017. This is the closing inventory. Closing inventory will be deducted in cost of sales. Again, closing inventory will be taken under current assets. So twice, 2 times. It is deducted in cost of sales. Again, it will be taken under current assets. Wages and salaries owing 2,100 and office expenses owing 200 on 31st March 2017. 2 expenses are owing, outstanding. It will appear twice. These owing expenses will be added to respective expense in the expenses here. Just like salaries. Wages and salaries already paid given in the trial balance. To that we add this wages and salary owing. Similarly, general expenses paid is given in the trial balance and general expenses owing will be added to the general expenses. Right? Again, the expenses owing will be taken as other payable. It will be taken under other payable in the statement of financial position. Then prepaid. Rent prepaid. Prepaid means paid in advance. It will be deducted from rent paid in expenses. Already in the trial balance, rent paid is given, rent and insurance is given. From that rent paid, deduct prepaid rent minus prepaid rent. And again that prepaid rent will be shown as other receivable. It will be shown as other receivable under current assets. The next one is increase the allowance for irrecoverable debt to 8,100. Already allowance for irrecoverable debt is given in the trial balance 6,600. In the trial balance, already existing allowance for irrecoverable debt 6,600. Adjustment, it is saying that increase it to 8,100. So whatever is the increase, that will be taken in expenses. The beginning of the year we are having 6,600. End of the year allowance is 8,100. So what is the difference? 1,500. That 1,500 will be taken under expenses. And the closing allowance for irrecoverable debt will be deducted from trade receivable in the statement of financial position. This is the statement of financial position. Trade receivable minus allowance for irrecoverable debt 8,100. The new allowance will be deducted from trade receivable. Next one, provide for depreciation on office equipment at 20% per annum on straight line method, fixed installment method. Same amount of depreciation. What is the cost of office equipment? See the trial balance. Office equipment cost is 20,000. So 20% of 20,000. So 20,000 into 20 by 100, you will get 4,000. Here I have written depreciation on office equipment, 20% of 20,000 comes to 4,000. This depreciation will be charged here. Similarly, depreciation provided on delivery van at 20% per annum on reducing balance method. So one asset straight line method, the other asset reducing balance method. So delivery van, what is the cost of delivery van? 27,000. The delivery van cost is 27,000. From this we deduct the provision for depreciation. So provision for depreciation on delivery van, last item in the trial balance, 5,400. So deduct 5,400, we'll get 21,600. This is the carrying value. This is the carrying value. On this carrying value, 20% is the rate of depreciation. So 20 by 100. 21,600 into 20 by 100, you will get the depreciation 4,320. Now this 4,320 is the depreciation on delivery van. This will be taken in. On office equipment, straight line method. On original cost 20,000. 20,000 into 20%, 4,000. On delivery van, reducing balance method. In reducing balance method, we take the cost minus depreciation, we will get carrying value. On that carrying value, we calculate 20%. That's all. Prepare the income statement for the year ended 31st March 2017 and prepare the statement of financial position as at 31st March 2017. That's all. So in this problem, we have so many adjustments. The students will commit the mistake in adjustment only, so be careful. In the first attempt itself, you may not be able to understand. So watch the video twice and thrice. Then you can get the complete command how to make the income statement and how to make the statement of financial position. Right? Now, first of all, look, income statement for the year ended 31st March 2017. Income statement. Why we make income statement? To find out the profit for the year. That's it. So you have to remember the format. The first of all, you should take the revenue, sales revenue. It is given in the problem, first item in the trial balance. So revenue is 4,19,700. First item. Revenue. From revenue, deduct revenue return. Revenue return means sales return. Sales return is called revenue return. Deduct revenue return, we'll get net sales, net revenue. The net revenue 4,11,600. From net revenue, deduct the cost of sales, we will get gross profit. Now, how to find out cost of sales? Opening inventory, add purchases, add carriage inwards, minus purchase return, minus closing inventory. These are the items you have to remember to find out the cost of sales. Again, I repeat, opening inventory. To this we add purchases and again add carriage inward on purchases, minus purchase returns, minus closing inventory. You will get cost of sales. So in our problem, opening inventory given 51,600. You can see the trial balance. Purchases are given 2,24,000. Carriage inward is given 4,600. Add up the three amount, 2,80,200. From this, deduct purchase return. The purchase return of 5,700 minus deduct 2,74,500. Now deduct the closing inventory. Closing inventory is given in the notes below the trial balance. So closing inventory, you deduct 42,900, you subtract. The resulting figure is 2,31,600. 2,31,600 is the cost of sales. Deduct the cost of sales. From this net revenue, deduct the cost of sales. You will get the gross profit. The gross profit is 1,80,000. To gross profit, if any other income is there, then you should add. In our problem, one income is there, that is discount received. Discount received is an other income. So add other incomes, discount received 9,300, add up, you will get 1,89,300. From this, we deduct all expenses. The expenses are first one, wages and salaries. In the problem, wages and salaries are given here 89,000. In the trial balance, 89,000 wages and salaries are paid. But in adjustment, it is given wages and salary owing 2,100. Payable, outstanding, not yet paid 2,100. That will be added. So 89,000 paid and 2,100 unpaid, owing. So add up both, you will get 91,100. Next item, discount allowed. Directly, whatever is given in the problem, discount allowed, you can see here. How much is the discount allowed? Where I am not getting that one. Here it is given discount allowed. How much is discount allowed and discount received? Both are given in the problem. Discounts. Discounts are given debit column 14,400, credit column 9,300. So debit column 14,400 is the discount allowed. 14,400 discount allowed. Carriage outward 21,600 directly given in the problem. Rates and insurance. Rent and insurance. Rent and insurance. So rent and insurance already paid is given in the problem. So here you can see rent and insurance 17,400. 17,400 paid. But adjustment it is given rent prepaid 1,200. Rent prepaid. Prepaid will be deducted. So rent and insurance 17,400 is the amount paid. And prepaid 1,800. Paid in advance. Deduct paid in advance. Owing will be added. Prepaid will be deducted. So prepaid deduct 15,600. Irrecoverable debt directly given 400 rupees, $400 we have taken. General office expenses. So here it is given general office expenses paid. The amount paid for general office expenses are 4,500. 4,500 paid. But in adjustment it is saying owing 200. $200 owing. Add up. So 4,500 plus 200, 4,700. Next comes allowance for irrecoverable debt. In the trial balance, allowance for irrecoverable debt is given 6,600. Adjustment it is given that increase the allowance to 8,100. Increase. So that's why we have taken under expenses. So 8,100 minus 6,600, 1,500 is the increase in allowance for irrecoverable debt. Next one, depreciation. Last one. I already told you depreciation 20% on straight line method and here 20% on reducing balance method. Straight line method means directly on cost, 4,000. On reducing balance method means deduct the provision for depreciation. Deduct the provision for depreciation, you will get carrying value. On carrying value, you calculate 20%. That's all. Take the total of all expenses. Take the total 91,100 plus 14,400 plus all these items. You will get 1,57,620. This is the total of all expenses. Now deduct. Gross profit 1,89,300. Oh, sorry. Gross profit plus other income. You will get 1,89,300. This is the total income. From this total income, deduct the other expenses. 1,57,620 minus. You will get the profit for the year 31,680. That's it. 31,680 is the profit earned during the year. That's all. So remember the format and adjustments. Now, statement of financial position as at 31st March 2017. Statement of financial position is divided into two parts. The first part, assets, and the second part, equity and liabilities. The total of assets must be equal to the total of equity and liabilities. So first we'll take the assets. Assets are divided into two categories, non-current assets and current assets. The non-current assets are office equipment and delivery van. From the total cost, we deduct the accumulated depreciation. The cost of office equipment is 20,000. The cost is 20,000 given in the trial balance. And provision for depreciation on office equipment was 8,000. So 8,000 is the provision till the last year. And current year, how much provision for depreciation we have provided? 4,000. So 8,000 was the old provision for depreciation and current provision for depreciation is 4,000. So total provision for depreciation on office equipment is 8,000 plus 4,000. Here I have written. Provision for depreciation 8,000, this is the old one, and 4,000 is the new one. The total depreciation 12,000. So 20 minus 12, 8,000 is the carrying value of office equipment. Similarly, take the delivery van. The cost of delivery van given in the trial balance is 27,000. 27,000 is the cost. From that total depreciation, the old provision for depreciation given in the trial balance is 5,400. This is the old provision for depreciation on delivery van. And the new provision for delivery van is 4,320. Add up 5,400 plus 4,320, 9,720 is the total provision for depreciation on delivery van. Deduct. We'll get 17,480. Now you add up both this. You add up 25,280. So 25,280 is the total of non-current assets. Now current assets. Current assets inventories. Which inventory? Closing inventory, not opening inventory. Opening inventory only once it will come here. Then forget, it will never come. Closing inventory is given in the adjustment, it will appear twice. Once closing inventory is deducted here, again closing inventory 42,600 will be taken here. 42,900. Then trade receivable. Trade receivable is given in the trial balance 1,19,100. From this, we deduct the allowance for irrecoverable debt given in adjustment. New allowance 8,100 deduct 1,11,000. Apart from that, other receivable. Other receivables are the prepaid rent. Prepaid rent, how much we have deducted here? 1,800. Adjustment it is given prepaid rent, rent paid in advance 1,800. Here we have deducted, then again the 1,800 rupees will be taken as other receivable. Last one, cash in hand. So remember, what are the items that will come under current assets? Inventory, trade receivable, other receivable, cash in hand. That's all. The total of all this is 1,81,880. 1,81,880 is the total of assets. Now equity and liabilities. Equity means capital. So equity, capital at the beginning of the year is 72,000 given in the trial balance. 72,000. To this we add profit earned during the year. How much is the profit earned during the year? 31,680. This is the profit. So add up 31,680. You will get 103,680. From this deduct the drawings. Trial balance given drawings are 28,800. Deduct, subtract, you will get 74,880 is the closing capital. Capital at the end of the year. Now, non-current assets, non-current liabilities. We don't have any non-current liability, put a dash. Then current liability. Current liability, first current liability, trade payable. That is given in the problem. Trial balance it is given. Trade payable directly I have taken 61,200. Other payable. Other payable includes amount owing, outstanding. The amount owing are wages and salaries. How much is the amount owing for wages and salaries? 2,100. And how much is the amount owing for general expenses? So here general expenses amount owing 200. So here 2,100, here 200. So 2,300 is the other payable. The other payable is 2,300. So here 2,300. Take the total 1,07,000. Now you add up 74,880 plus 1,07,000, 1,81,880. This is the total of equity and liabilities. So our balance sheet, our statement of financial position is tallied. The total of assets and the total of equity and liabilities both are same. So take a screenshot of the solution. Then briefly I'll explain. This will conclude this video regarding the 7th problem. So in this, financial statements consist of two parts, that is income statement and statement of financial position. The income statement is prepared to find out the profit for the year, and statement of financial position is prepared to list down the assets and liabilities. The income statement is prepared for a period of time. That's why it will be written for the year ended. Whereas the statement of financial position is prepared as on a particular date. That's why we write on as at. This is the difference, right? And you must remember the marshalling of the items, the format of the items. So to find out the profit, first we take the sales revenue minus sales return, net sales. From net sales revenue, deduct the cost of sales. The cost of sales consists of opening inventory, add purchases, add carriage inwards, minus purchase return, minus closing inventory. You will get the cost of sales. So sales minus cost of sales, you will get the gross profit. To gross profit, if other income is there, in our problem we have other income, discount received, add up, we'll get total income. From total income, deduct all expenses, we'll get the profit for the year. Then in the statement of financial position, first we take the assets, non-current assets and current assets. We get the total assets. Then we take equity and liabilities. We take the equity, opening equity will be given. To this we add the profit earned during the year minus drawings. We'll get the closing. Non-current liability we don't have. Then current liability we have trade payable, then bank overdraft, then other payable. That's it. So this is the end of problem number 7. So if you're satisfied with my lecture, give a like to the video. Share my channel among your friends, among your circles, so that more students can watch the video and enhance the knowledge. Do subscribe my channel and give the comments on these videos so that I can be able to improve the quality, the requirement of future videos. Inshallah, the next problem will continue in the next